The COVID-19 pandemic reshaped the world as we knew it, and its impact on the commercial real estate industry has been nothing short of seismic. Traditional office spaces, once bustling with activity, fell silent as remote work took hold, leaving landlords grappling with unprecedented vacancy rates. The shift to online shopping, already underway before the pandemic, accelerated dramatically, placing stress on brick-and-mortar retailers and leaving many questioning the future of shopping malls. Despite these challenges, the commercial real estate industry is not monolithic. While some sectors are undeniably struggling, others are experiencing robust growth, driven by evolving consumer behaviors and technological advancements. The pandemic underscored the importance of adaptability and innovation, forcing industry players to rethink traditional models and explore new avenues for value creation. As we navigate the post-pandemic world, it's clear that the commercial real estate industry is at a crossroads. The decisions made today will shape the future of our urban landscapes, influencing how we live, work, and interact with our built environment. Understanding the challenges and opportunities that lie ahead is paramount for investors, developers, and policymakers alike. The path forward requires a nuanced approach, one that acknowledges the profound changes brought about by the pandemic while embracing the potential for growth and transformation. By carefully assessing market trends, embracing technological advancements, and prioritizing sustainability, the commercial real estate industry can emerge from this period of upheaval stronger and more resilient than ever before. Even as certain segments of the commercial real estate market face headwinds, others are experiencing remarkable growth, offering glimmers of hope and highlighting the industry's capacity for adaptation. The rise of e-commerce, fueled by pandemic-induced shifts in consumer behavior, has been a boon for industrial properties, particularly warehouses and distribution centers. With consumers increasingly relying on online shopping, the demand for logistics space has skyrocketed, leading to record-low vacancy rates and surging rents in many markets. This trend is expected to continue as e-commerce further solidifies its position as a dominant force in the retail landscape. Another bright spot is the multifamily residential sector, driven by a confluence of factors including population growth, urbanization, and a growing preference for renting over homeownership, particularly among millennials and Gen Z. As housing affordability remains a pressing concern in many cities, the demand for well-located, amenity-rich apartments continues to outpace supply. The digital economy is also fueling demand for specialized commercial real estate assets such as data centers, cell towers, and server farms. These properties are essential infrastructure for the digital age, supporting everything from cloud computing to mobile connectivity. As our reliance on technology continues to grow, so too will the demand for these specialized real estate assets. These pockets of promise within the commercial real estate industry demonstrate that even in the face of significant challenges, opportunities for growth and innovation abound. By identifying and capitalizing on evolving market trends, investors and developers can position themselves for success in the years to come. While the commercial real estate industry shows signs of resilience, it is not immune to the broader economic headwinds facing the global economy. The Federal Reserve's aggressive interest rate hikes, aimed at curbing inflation, have raised concerns about a potential recession. A recession would have significant implications for the commercial real estate market, potentially leading to decreased demand, falling property values, and increased loan defaults. Higher interest rates make it more expensive to finance new construction and acquisitions, potentially slowing down development activity. This could exacerbate existing supply-demand imbalances in certain sectors, particularly in the office market, where vacancy rates remain elevated. Moreover, a recession could lead to job losses and reduced consumer spending, further dampening demand for commercial real estate. Businesses may downsize their physical footprints, leading to increased office vacancies, while retailers could see reduced sales, potentially leading to store closures and shopping mall struggles. Navigating this period of economic uncertainty requires prudence and careful risk assessment. Investors and developers will need to closely monitor economic indicators, adjust their investment strategies accordingly, and prioritize properties with strong underlying fundamentals, such as favorable locations, desirable amenities, and strong tenant demand. While the possibility of a recession poses a significant challenge for the commercial real estate industry, it is important to remember that economic cycles are a natural part of the business landscape. By taking a long-term perspective, embracing adaptability, and making strategic decisions, industry players can weather the storm and emerge from this period of uncertainty well-positioned for future growth. Section 4. Inflation's bite operating costs and consumer confidence. Persistent inflation adds another layer of complexity to the CRE landscape. While rising inflation can sometimes lead to increased property values, it also brings about a surge in operating costs, squeezing both landlords and tenants. The cost of construction materials, energy, and labor have all risen sharply in recent years, impacting the profitability of CRE investments. For landlords, passing on these increased costs to tenants can be challenging, especially in a competitive market. Tenants, already grappling with their own inflationary pressures, may be hesitant to absorb rent hikes, potentially leading to lease negotiations and vacancies. Moreover, inflation can erode consumer confidence, leading to reduced spending and potentially impacting demand for CRE assets, particularly in the retail and hospitality sectors. As consumers tighten their belts, discretionary spending on dining, entertainment, and travel may decline, affecting businesses that rely on these sectors. To mitigate the impact of inflation, CRE investors and operators need to explore innovative strategies to manage operating costs. This could include investing in energy-efficient technologies to reduce utility bills, negotiating favorable contracts with suppliers, and exploring alternative building materials to offset rising costs. Transparency and open communication with tenants are also crucial during inflationary periods. By working collaboratively with tenants to find mutually beneficial solutions, landlords can foster stronger relationships and navigate the challenges of inflation more effectively. Section 5. A call to action. Reimagining the future of CRE. The confluence of challenges and opportunities facing the CRE industry underscores the need for a comprehensive reassessment and revitalization of traditional approaches. The pandemic served as a stark reminder that adaptability and innovation are no longer optional but essential for survival and success in the evolving real estate landscape. Reimagining the future of CRE requires embracing a multifaceted approach that addresses the evolving needs of tenants, investors, and communities. This includes prioritizing flexibility and adaptability. The rise of remote work and hybrid work models has fundamentally altered the workplace, diminishing the need for traditional office spaces. CRE developers and landlords must embrace flexible design principles, creating spaces that can easily adapt to changing tenant needs, incorporating co-working areas, collaborative spaces, and flexible lease terms. Embracing technology and innovation. Technology is rapidly transforming the CRE industry, from property management platforms to virtual tours and smart building technologies. Embracing these advancements can enhance efficiency, improve tenant experiences, and create new revenue streams. Focusing on sustainability and wellness, environmental, social, and governance (ESG) considerations are no longer optional but essential for attracting tenants and investors who prioritize sustainability and social responsibility. Incorporating green building practices, promoting energy efficiency, and creating healthy and engaging work environments will be crucial for future-proofing CRE assets. Fostering community and connectivity. As urban populations grow, the need for vibrant, connected communities becomes increasingly important. CRE developers and investors have a vital role to play in creating mixed-use developments that integrate residential, commercial, and public spaces, fostering a sense of community and enhancing quality of life. By embracing these principles, the CRE industry can navigate the current period of uncertainty and emerge as a driver of innovation, sustainability, and economic growth. Section 6. Conclusion. Embracing adaptability and innovation. The CRE industry stands at a pivotal juncture, facing a confluence of challenges and opportunities that will shape its trajectory for years to come. The pandemic's impact, the specter of recession, and persistent inflation have created a complex and dynamic landscape that demands adaptability, innovation, and a willingness to challenge long-held assumptions. The traditional model of CRE, characterized by long-term leases, static spaces, and a focus on office and retail assets, is being challenged as never before. The rise of remote work, the growth of e-commerce, and evolving consumer preferences are forcing a fundamental rethink of how we design, build, and utilize commercial spaces. However, amidst these challenges lie significant opportunities for those willing to embrace change and reimagine the future of the industry. By prioritizing flexibility, embracing technology, focusing on sustainability, and fostering community, the CRE industry can emerge from this period of transformation stronger, more resilient, and better equipped to meet the evolving needs of tenants, investors, and communities alike. The future of CRE belongs to those who are willing to adapt, innovate, and embrace a more sustainable, equitable, and technology-driven approach to real estate development and investment. By embracing these principles, the industry can play a vital role in shaping vibrant, thriving, and resilient communities for generations to come.